Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, July 3rd. Market just closed early in observance of tomorrow, Independence Day. And oh boy, we closed in both ES and NQ above all-time highs. Let me first review the economic data, and then we are going to do some technical analysis in the charts, and let me show you my trades, because oh boy, when the markets want something, when they want all-time highs, when they want at psychological levels, you better don't put yourself in front of that train. Having said that, let's do a quick review of the economic data. The most important data today was the ISM Services PMI that came at 48.8, coming from 53. This is a contractionary reading coming from expansion 53 to contraction below 50. We were expecting a little bit of decrease to 52, but oh boy, this is really good for inflation. And at the same time, look at these factory orders in the negative. Factory orders excluding transportation in the negative. ISM services breakdown, business activity contraction, employment contraction, new orders contraction, and prices. We are above 50, but coming from 58, we are also good. We were expecting 56.7 and we got below that. So pretty good data. And that coupled with the fact that the global composite PMI for June final was showing higher expansion. Initial jobless claims and continued jobless claims came as expected. So basically, services are cooling down. And that's the final nail for the Fed. This is good. So now what? Well, now we have to do technical analysis. And let me first tell you my favorite time frames are daily, and from that I usually go to the 1 hour, 30 minute, 15 minute, and 1 minute. The 30 minute is used for the TPO charts. If you know what I'm talking about, those are built in the 30 minute charts, the TPO charts. I don't use TPO charts here in TradingView. I use those in Trade08. But I would like to talk about yesterday's setup in my video. I'm going to link you in the upper right corner my yesterday's video for you to review what was my setup, because yesterday I was basically telling you I need the market to close above this zone, and that was this candle in the 1 hour. This is the 1 hour chart. This candle was the bear structure. I usually frame the 0.5, the 50% retracement there, and yesterday when we started pushing higher the golden pocket, leaving behind this inverse and pushing towards that 50% retracement, I told you in the video, if we close, that was before the close, if we close above that, today I'm going to try to find some setup for all-time highs. It's usually in these kind of days of early close, those are boring days, but Nasdaq is so bullish. Nasdaq had economic data showing inflation is cooling down on the services, which is the sticky inflation, and we need to be technical in this kind of setup. So remember this green line, horizontal line, because we closed above that during pre-market. We established some range, we tapped, and we flew. We ripped higher from that. Let me go to the 30-minute chart, because then here I have some levels. I was expecting the Nasdaq to really go lower and try to find some support and buyers down here in this fair value gap zone of 20,150. Yesterday I talked about this level. But in the 15-minute, I mean, when you go down and down and down to all these time frames, you can see that, look at this. This is too perfect. So on the 1 minute chart, I was looking in the overnight to shorts. I was looking for shorts. Why? Because those levels I wanted to, this liquidity down here was so perfect that the manipulation move down here was going to happen most probably. And I was waiting for that. The issue was that I wanted first to take the liquidity up here and then try to frame the short. So this week was taken, the blue dot, the white dot line, the 1 minute liquidity was taken during the overnight, and then we quickly rejected and we left this fair value gap, this little fair value gap. I was hesitant here, even though that was a really cheap short up here for basically 8 points. And I was, oh boy, if I could have another opportunity, I might take it. And that's what I did. Once I saw this candle, I took the new lows. I put a stop up there for, how much is this? 11 points. 11 points, targeting these lows. And that was the short of the overnight. We took that. We took 40 points out of this market, and then I was prepared to take the long for all-time highs. Sometimes you can take both sides. So don't hesitate if you feel that the drawn liquidity is down, because these kind of setups are usually good for the drawn liquidity, the manipulation move, and then rip higher. Open, and let me show you, because this is just chop, chop, chop. This is data, the ISM. And then we got this. With so much chop, there's usually not a lot of fair value gaps. As you can see, there's nothing. So I don't have any setup. I have to take something based on horizontal levels or basically demand. So we have this week that we took here, and we started to bounce 1, 2, and I was saying, when are we going to rip? I was actually waiting for this kind of move, which usually it's the manipulation move to take these lows and then rip higher. So there's a fair value gap in here that was being respected, but I wanted this manipulation move. But after this candle, I was just thinking I'm going to most probably lose the trade if I don't jump right in. So I took basically this high, the first candle, and the lows. I was risking the manipulation move and then rip higher, but it was just after 40-point move. This was 13 points. That was pretty cool, pretty good. And the target was, as you can see, there's first, I was not targeting all-time highs. Why? Because we are going back again to the 1 hour time frame. Look at this close. This was the candle and this was the close. If we close one candle above that level, we are most probably targeting all-time highs. And that's what I did. I was targeting that and then trying to find a pullback into a fair value gap or something, but I never got the opportunity, and we just blew everyone out to all-time highs at 20,371. And we even went farther. 20,435 a quarter is the new all-time highs. So another trade which I could perfectly just leave it for all-time high, but 35 points in an early close plus 40, 75 points, almost $1,500. And then that's, you have to take that. If you want to manage your account, you need to take those trades and you need to take those gains. So sometimes it goes farther, but I mean, I took a 2.7 residual ratio for 35 points. That's really good for me, for my performance. So having said that, new all-time highs in the NQ, new all-time highs in the ES, it's basically the same setup. We blew everyone's face today. Tesla 6.54, Nvidia 4.57. Oh boy. Things that I like. Closing the NQ, let's go to the continuous chart. Closing the NQ on this kind of thing with the point of control down here and both the 20 and the 45 pointing higher. I can see 21,000 in the upcoming weeks. I can see it. So I'm again bullish. I'm going to be careful on Friday because right now there's from there to 21,000 is just 2.87. That's a lot of days of good days of the Nasdaq. So I'm bullish again. I would like this high to hold on Friday. Friday is NFP and unemployment rate data. So we have to manage our risk on Fridays with that kind of setup of data. But I'm pretty bullish. Look at the volume there. The ES, it's also closing at its highs. Nvidia, look at this on Nvidia. Look at this. This was pretty beautiful breakout, gapping down the other day and just reclaiming into a descending pattern breakout. If we go to 130 and we continue higher, Nvidia is going to fuel those equities, NQ and ES, to the extreme. So Nvidia is looking great, Tesla is looking great, Apple, let me just go to the daily. Apple, new all-time highs. Microsoft, new all-time highs. Google, double top at new all-time highs. Meta is just weakening a bit, and Amazon is rejecting all-time highs, but we are all there. So these are the things that I like. However, dollar, it's selling off. This also I like. Let me just go to the 1 minute because dollar today was just selling off the entire day. But things that I don't like, yields are the short-term yield, the 2-year yield is 4.7, still quite high. I would like this zone to be broken down. The 10-year, it's pulling back from its high. And one thing that I've been talking about in my videos, in my 2-3 past videos, is the inverted yield curve. As you can see here, we are at resistance right now after a huge move into an inversion. Remember that for bulls, the worst thing that can happen is the inverted yield curve to uninvert to 0%. So we are waiting for that. Let's see what happens with the yield curve, because this is going to be key for the upcoming weeks and into the summer. If we uninvert during the summer, in September, there's going to be a lot of volatility. So I'm still watching this. Today is a good day of pushing back down again. But things that I don't like, IWM small caps are flat, are not pushing. I would like the small caps to continue pushing higher. If we watch the breadth, we can see down here that the momentum is kicking higher. There's a 45%. We came from, let me see the low, from 28 to 45% of stocks above the 20, but there's no long-term strength. Look at the percentage of stocks above the 50, it's only 41, and only 52 are above the 200-day moving average. So certainly a lot of weakness and not overall breadth following the equities in the equal weighted ETF, the RSP, and we are in the middle of the range. I mean, if we take this as the range, we are just right in the middle. So breadth still not improving. And this is just a concentrated market, not only in Nvidia, but also in the other stock. The Magnificent Seven are pushing through all-time highs again. And I mean, it is what it is. We have to trade price action. I was bearish looking into today, perhaps not today, but yesterday's into the close. I was just putting my levels into this needs to happen. If that happens, maybe tomorrow I will be reassessing my bias. And that's what happened. And that's the kind of flexibility that you have to take, and you have to learn to apply to this market. Now, let me go to the 1 hour, because I need some higher time frames to really be here. And let me just do the analysis. Let's move our new all-time highs. It's basically 20,435 and a quarter, and we can remove that. Let's just take this here. This is the previous all-time highs, and this is the level that I need to see holding. There's a huge, I mean, we just end in the 1 hour straight up. This needs some kind of, since the open 930 pip retracement, and I need to see this holding. There's 30-minute, there's a 15-minute anywhere. We have this fair value gap here at discount. So I would like that, and look at this, because this is, so this is a 15-minute, and we tapped already. Let me just clear this. We tapped already a 50% retracement, so this needs to hold. And there's another one here that I would prefer to hold. This one up here, even though it's not in discount, we are higher. That is holding the previous all-time highs at 20,371. So something like this, I would like to hold, and then pushing higher on Friday. That would be decent. If we sell off directly like this, I would hesitate a little bit, and perhaps I would like a retest here. But it's quite tricky because this range is quite huge, and the move today was so big that the golden pocket and the 50% retracements are quite low. So let's see what happens. Ideally, I would like these two to hold, but we just have to manage our risk. We went straight up, and on Friday is going to be pretty difficult. So on the 5-minute, there's something. Yeah, look at this. This was beautiful. So I would like something like this. If not, this liquidity down here. Let me see on the 15. Yeah, we might see some kind of move down here. So let me just, this would be liquidity, and there's the second one here. So we have 2 draws on liquidity here, and I mean, we can remove that. We can remove this liquidity, and we can remove this short, this liquidity, and let's see what happens. It's going to be quite difficult to trade. That was held, so I can remove that. This was the retracement from the other day. This was taken, and this liquidity down here. So pretty difficult. This is also gone. Can remove that. So this is the setup for tomorrow. This is for me. I think we might see some kind of pullback, perhaps taking this liquidity here. I don't want to buy up here. Today was, I mean, was a huge day without any. Today, let's be honest. Today and every close, we usually don't see these kind of things, but you know what we are seeing, right? We are talking about the Nasdaq, and we are talking about good services, PMI data, and Friday is going to be key also with NFP and unemployment rate, but we want to manage our risk. Certainly, I will be buying for sure down here, leaning on some kind of structure. This is on discount. This is a good level. We have some kind of structure here. We have relative equal lows down here that I would like to tackle and then push higher. This zone is more risky, but it's the previous all-time highs. So we might find a lot of buyers there. From 371 to 327, these two zones are 50 points. That's 1,000 baht. So there's no way I could hold a trade in those two zones. So I would have to manage my risk if I want to trade this. This is the typical setup, bounce from previous all-time highs. We already saw that here. But I think the more technical level is down here. It's a 50% fib retracement. Big hedge funds and big investors are algos like that level, the 50% retracement discount. They want to buy low. So let's see what happens. But for sure, I'm going to be pretty bullish for Friday unless the data is pretty bad. So that's my setup for there. I would like to manage my risk in something like this. And if not, we can lean back on something like that. So we have number one, risky, and number two, that's certainly my preferred one for the Friday. I think that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. The market is closed, early close, because tomorrow, Independence Day, is a bank holiday. Markets are closed, and we are coming back on Friday with NFP and unemployment rate. I hope you had a good trading day today. This was a clear pattern of hype for new all-time highs, and we just flew through that. We took the opportunity, but now let's trade for Friday. Let's see what happens, how we end up the week. We are looking so bullish that we might see some kind of profit taking into Friday, and tomorrow, who knows, there might be news or things like that. But you have to always be patient, be disciplined, and manage your risk. You have my levels and you have my setup. Let's see what happens. I'm being super transparent with you. I want to share this with you because this is my way of approaching the markets, and I would like to share this with you for you to also learn how to trade these markets and how to take these opportunities. That's all. I hope you have tomorrow a nice holiday, and let's see you on Friday. Remember, disconnect from the markets tomorrow, take a good rest, and let's go with everything on Friday, 100% being mentally centered and emotionally also centered. So stay safe, everyone, and see you on Friday.